Hello and welcome into commodity culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Peter Grandich, a veteran of the finance industry with decades of experience in a variety of roles on Wall Street and author of Confessions of a Wall Street Whiz Kid. We're going to get his current thoughts on the junior mining sector, opportunity of a lifetime, or a place where money goes to die. We're going to talk about where he sees the gold and silver markets headed as we transition into 2025, where he's currently watching in terms of the ever-shifting geopolitical landscape, and much more. I hope you'll enjoy my conversation with Peter Grandich. So I want to start our interview today with a broad question that I like to present at the beginning to get an idea of where my guest's head is at. And the question is, what are the main themes and trends you're currently watching when it comes to markets and the economy that you think investors should be paying attention to right now?
Well, we're at a unique period. Not only is it only once every 4 years, normally we change administrations. Sometimes there's a repeat of the previous one, but we are taking an administration that clearly goes in a different direction than the past one. Not going to bother wasting all the time about who was right, who was wrong, but there's little evidence that there's much in common. So I think that it's not business as usual, so to speak, and you have to kind of look at now. The markets have accepted so far in a very positive way Trump's administration coming in from a business standpoint. Although I think the jury is very much out, Jesse, about tariffs. History has shown that tariffs have not served countries well when it got into using them aggressively. It led to trade wars, and there's no happy parties in that. And that could still have been a lot of blustering and positioning. He's known to do that. He's historically, going back to his early days as a business person, is threatening the world, and then you feel like only lost half the world, that you got a victory with him. So I think it could be part of a negotiation. But I think, as far as the markets are concerned, Jesse, they're priced for perfection, meaning they're highly valued here in the U.S. Valuations have not really ever been higher. Historically, outside the U.S. versus U.S. equities, historically cheapest ever. Uh, Complacency is at a record. I can't recall in 40 years more of a lack of concern expressed in the financial service industry, separate from the few of us that work on the fringe and maybe work in the metals and all, and maybe see the cup half empty and all. And then I think the third is that we are treating Trump's arrival at the moment more of a coronation than a change in administration. And while that could lead to markets staying higher than normal for a little while, it also is going to set up disappointment much easier if things don't go as planned. And so I think for me anyway, I believe the philosophy here is better to be a live chicken versus a dead duck. Commend it if it's a year or two from now and it did become nirvana, as some seem to think. But history is on our side that says caution is a good choice at this point in time.
Yeah, it's interesting you bring up overvaluation in the broad market, because I had Bill Fleckenstein on the show recently. He brought up a point that, of course, the market can remain irrational longer than you can remain solvent. It's very difficult to call the timing on these things. But also, he pointed out the record amount of inflows over the past several years. I don't know if you want to call it a decade or so, into these massive ETFs that track the broad indices, and just the amount of passive investing. And he says that that's fundamentally changed the market to the point where now this sort of overvaluation can go on for far longer than it could have in the past. What are your thoughts there on the effect of the amount of passive investing and inflows going into these big ETFs?
Well, I'm glad you asked that question because it's not often spoken about. I've been speaking about it for the last several years. Well over half the mutual funds are almost 60% passive funds now, but on average, it's about 50-50 now, where people's monies are in passive funds, which simply mean that they're not, in a sense, actively changing. The manager, no matter what is following an index, a particular sector, is not deciding day in and day out which individual stocks to buy or sell. It's trying to match the performance of a particular index and all. So what's happened is a lot of that money has flown into the bigger caps, not the small caps. And that, in a sense, almost creates a self-fulfilling prophecy because that money gets put to work in those stocks. They tend to do better. Because they're doing better, more money flows in to track that, and it kind of feeds on itself. I think that's what he's probably, I don't know what his wording was, but I would assume that is what he's seen because I and some others have spoken about that as well. The issue, of course, is if and when the market ever turns, and people start to see it as half empty, not half full, those managers won't have discretion to go, oh, wait, even though you want to sell us, I'm going to hold on to these stocks because they're not as big. They have no choice. So while it worked and still working to influence the upside, if and when we ever have a bear market again that lasts more than a sneeze or two, then we're going to have a problem because that passive money management is not going to be able to control the outflow where they might have otherwise if it was under their discretion.
Hey guys, quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Well, let's circle back to Trump's coming presidency because you've spoken a lot about a variety of crises facing America, a debt crisis, a retirement crisis, obviously the polarization when it came to the political realm between the right and the left. Does a Trump presidency change any of this? Does it really matter who's in charge? Is it just a math problem? What are your thoughts there?
Well, it's interesting. Those three topics remain part of why I feel an ARC still needs to be built. In fact, I'm quite concerned from this end of the Trump presidency that he may actually accelerate the debt issue and make it worse than it's ever been. It goes back to, did he say these things just to get elected, or is it really his plan? He talked about just giving just about everybody not have to pay taxes. This group doesn't have to pay taxes. So screw people. The bottom line, you still need all this money to run the government. And as much as they have good hopes to cut some of the government waste and spending, let's not forget that we're running anywhere between $2 to $3 trillion a year deficit now. So even if they reduce that by a lot, we still have all this debt that's outstanding that has to be paid in. But the real issue is in the retirement crisis, and why that's becoming more acute. Not only is 2/3 of Americans working paycheck to paycheck now, but the boomer generation is reaching its peak. And unfortunately, we're going to start passing away faster than we've passed away before. The problem with that also is that the vast majority of people are not prepared for retirement. They're not going to be able to live the life that those commercials that they watch, that the people somehow live their last 20-25% in somewhat luxury. The problem is those people that are going to have to keep on working will be working at an older age. It's much more challenging, trust me, at 68 than it was at 58, 48, and 38. But they're also going to call on government for more assistance at a time when government's going to be trying to pull back from all the spending that it's done. So I still think there's a lot of issues. The two issues that I think that are off the table that were in my ARC before the election, the immigration, I think he's clearly going to make an effort to stem that. And also the attack on freedom of speech, which was really being abused up to that. I don't think where a lot of people momentarily like deer in the headlights, I don't think he's going to be able to do anything about the BRICS movement. I think that movement is a movement that's here to stay. They're smart now. They're not challenging and getting into a media blitz with him. But come next fall, I think you and I, if you're blessed to give me the opportunity to speak to you again, I think we'll be seeing the BRICS moving more forward, not going backwards as just a few weeks ago. Suddenly everybody thought the BRICS were a dead issue. So I think there's some little room, and I can understand, especially after this past administration, which was a horrible economic administration. I'm not being political here. I mean, it's hard to point to anything that Bidenomics or anything on the economic side that was beneficial for us. And so I think people more just relieved that we're not going to be continuing that. But Trump is going to have a pretty short window. And this is important too, Jesse. Sorry for being long winded here, but he doesn't have 4 years. He has 2 years, because in 2 years, again, we have less than 2 years now. We have the congressional elections again, but we also have a lot of senators up for election. And this time there's more Republican senators up for election than Democrats. And so if he doesn't get out of the gate and it's hesitating, and he's not getting the same political will he might have had right now, it could be more challenging those last 2 years of his 4 year term than his first 2 years. So a lot's going to have to do in those first 90 days. That's going to say a lot to do where we're going to go over the next few years.
Yeah, fantastic breakdown. I want to switch over to the commodities sector at the moment and ask what you think about commodities more broadly, given current geopolitical conflicts. We're seeing a lot of onshoring of resource production. We're seeing things like China restrict the export of, at the moment, certain rare earth elements. That could change to a variety of commodities. We've seen Russia now restrict the export of converted enriched uranium to the United States. This could, again, continue with many other resources, as Russia is quite a powerhouse in that sense. How do you see the commodity space playing out up ahead? And which commodities, if any, do you think will be the winners in the years ahead?
Well, you would think that we learned something in COVID, and I speak just for Americans, that when COVID hit, we realized that a lot of stuff that we need day to day isn't being made by us. In fact, a lot of it was coming from places that may have not been the best of friends to Americans, and that hasn't changed much. But on the commodity side, that's absolutely critical. I mean, there are so many metals that even to this day I have trouble pronouncing, let alone understanding what they do. But they're so critical to military and power and all the things that we're hopeful for. Because, if you're going to believe all this Wall Street happiness about AI and electrification and all that stuff, you're going to need all these metals that go along with it. And a lot of these metals are only being basically discovered and developed in areas of the world that, at the same token, we're almost in a sense threatening them, China being, the biggest one and all. So in that regard, I think commodities, and some people think about agricultural. I don't really focus on the agricultural, but I will tell you this. There are a whole bunch of metals, and none of them that I can point to where there's just an excess that used to exist. And therefore, if you're going to believe that the world is not going into a deep depression or what have you, we could be making a mistake peeing off the so-called people that we're going to be dependent on to get these. And I hope that he is and his group is smart enough to know that, and this is more posturing than actually trying to get in for tit for tat, because I'll tell you this, America will lose the tit for tat war when it comes to commodities.
Yeah, and interestingly, the Canadian government now talking about restricting energy exports to the United States in response to Trump's tariffs. Obviously, Canada, a very big energy producer, but they're in no economic position to be doing that. What are your thoughts on these comments?
There's already a division in that, where the power really comes from Alberta and all. That was the Ontario and Newfoundland. If I just say this, and I love my Canadian friends who used to be my home away from home. I know you were raised kind of there and all. Canada's more of a mess than America is, economically, socially, and politically. And they have even a bigger immigration problem than we do and all. So I don't know if Canada is in any position, especially with the current leader, to get into a match with Trump. I think that would probably be the most unfair battle about between two political leaders. I don't think Trudeau could be in the same room and last longer. Hopefully, the change in government that seemingly people think is going to take place, a government I think that's being their leader that's leading that opposition seems to have a much better head on his shoulder. But Canada has a big fight ahead of itself just to get its own house in order, let alone try to get off into a fight with still the two biggest trading partners in the world.
Yeah, absolutely. And from your perspective, out of all the metals that you're looking at, which do you think will outperform up ahead? I know that you've been bullish on uranium in the past, gold, silver. Any thoughts on copper at this point in time, or any of the other base metals?
So it was uranium until early this year. It was gold this year, and it's copper for next year. I think copper, the argument is just getting just better and better. All the people, if you look back 6 months ago, said it was going to be, well under three. There's going to be a terrible economic slowdown. All the problem is it's not, and that's one more year that we didn't expand the ability to find it. Uh, and yet it's such a key metal in all the things that people are bullish on about how the world's going to grow and so forth. So copy be it. But there's another metal now that's come onto my radar that I think people should start to think about, only because one of the smartest men ever in the metals, like him or not, he's always more times ahead of the crowd than behind it. Robert Friedland is now speaking a lot about zinc and the coming potential shortage in the zinc market. And so copper and zinc would be the more favorable ones. Doesn't mean that I stopped liking gold. I think uranium is still a good story. It's just that I was in it so early and made such an amount that, I moved on to other things, but I still think it has a dynamic supply and demand scenario.
So let's talk about gold for a moment. Obviously, reaching all-time highs this year. Gold bugs very ecstatic, but they're never satisfied, as we know, with the gold and especially silver bugs when it comes to that matter. Because there's been quite a divergence between the metal itself and the miners, at least in the eyes of many. We've seen exceptions to this, Agnico Eagle. However, Barrick and Newmont seem to be underperforming. When we go to the developers and explorers, we're not getting that leveraged play on the gold price that many were expecting. I wonder if you're seeing the same things. Are gold's stock investors, are their expectations just too high, or is this really kind of a scenario where you think that the miners have a lot of room to run to catch up to the gold price?
Well, Jesse, at the onset of your question, you hit it, and that is bullion's done real well. If you just owned the bullion, which I did, a part of my portfolio did really well. But I was part of that other crowd that also owned the shares and was going, how come these shares are so bad compared to what the metals are doing? And that's what people have not been satisfied about the gold performance. Because anybody that recognizes 30% a year in gold price going up is a phenomenal move.
Yeah.
The majors, for most of them, you mentioned two that aren't doing so good. Newmont has some issues to deal with, Barrick, but then of course you went to the other side. Agnico Eagle is just a phenomenal company right now. IM Gold's even turning around in Canada. They're printing money now in free cash flow, and you can already see the increase now in their M&A, and I think that's going to be big for the juniors. But let me tell you the two biggest issues that the junior market is. My portfolio right now is cash and junior resource stocks, and by the way, 99% of the people listening to this should not be doing that. For me, it's doable at this point. But here's the biggest challenges for the junior resource market, the two biggest ones. And you have to accept it and deal with it. One is crypto continues to eat its lunch. I would say that 20 or 30 years ago, if I went and spoke at the typical gold shows, like the ones that you've been involved with and all, there were a lot of 30, 35-year-old, even 25-year-old investors there looking at junior resource stocks. They're at the crypto conferences. They're not to a large degree. So crypto continues to be strong competition, keeping money that might have flowed to juniors. The other big thing, and this is what a lot of people don't want to speak about, even in the industry, but this is part A and part B, are really critical. First of all, that end user, that person that ends up buying these junior stocks, not just those people I told you that are no longer showing up, they used to be basically led by a leader, and that leader was a typical financial advisor who built a book of business owning these junior stocks. And therefore, if that Acme Resources got Peter Grandich interested, you got my 100 to 500 clients involved. Basically, no financial advisor builds a book of business around individual stocks anymore because there's no commissions anymore. A few may do it under a money management program, fee-based and all. So that was that. Even if all those end users still exist, Jesse, and I don't think they did, and I'm going to tell you another group why I think there's less people now than 10 or 20 years ago, that mining junior has to get to those individuals almost on a case-by-case basis now. So where it's been like programs like yours and others where people have a following commodities, so those juniors try to get involved in those companies so they can speak. But it's a much bigger challenge from a marketing standpoint. But here's the biggest part. The institutional interest in juniors has shrunk tremendously. There might have been in Canada, just Canada, which was used to be the home for, junior resource stocks, 40 or 50 leading brokerage houses, mining desks, whatever you want to call them. Maybe there's 5 now. six, and maybe 20% of the people, manpower that used to make up those teams are left. They have very little new money coming into their funds. So all of this has been a negative. And yet, juniors have to keep raising money. They have to find people and so forth. We're just starting to see a light at the end of the tunnel that isn't another bear train heading to us. We're finally seeing a marked increase in financings being oversubscribed, more people starting to talk about the mid tiers and all. But the key is this: the majors who are printing money, like I said, free cash flow. We just saw a record low amount of dollars that they are putting to grassroots exploration. So if they're going to replenish the millions of ounces of years of gold and other metals that they take out of the ground and produce, they are going to have to go on a shopping spree because it's going to take too long and too much money to try to get that. And now with so many juniors with advanced stage explorations and some in development and even some starting to produce, still at 10 to 40 or no more than $50 an ounce marked in the ground based on their market cap, we're going to see huge M&A in 2025. We already started to see it the last couple of weeks. We just saw Agno Eagle do a big deal yesterday. An all-cash deal, 67% above the average trading of the stock. That's a really, really good sign for 2025.
Yeah, absolutely. I want to get your thoughts on the silver market, both the metals and the miners. Obviously, this is a sector that it's performed well over the last several years if you actually zoom back and look at the price, where the price of silver was and where it is today. But of course, people always look at the previous all-time high and think that silver should be a lot higher. I spoke to our mutual friend Andy Scheckman. He believes it's the most undervalued metal on the planet right now. I'm wondering what your current thoughts are on silver.
Silver always has been a more cult-like metal than gold.
Yeah.
As you said, there are gold bugs, but silver bugs are even more stronger and more adamant about it and all. And I know that because I used to say at the shows, boy, this used to get me in trouble, but I used to say it all the time. Owning silver is like kissing your sister, and compared to owning gold. And for a lot of years, that was the case. But silver's fundamentals have become much more positive. Not only is there a tremendous drop in the supply, and I'm not even talking about arguments of shorting and all this, the very fact, and it appears to be correct, a lot of good sources seem to be identifying this, that even China now is going out and buying silver directly from producers around the world and so forth and so on. And yeah, you're right. I think people get too caught up about that old high and, about being down. I think it's performed better than most people give it credit to, but I still think it will always, unfortunately, be just behind gold in terms of recognition, particularly among institutional. It's more of a retail love for it than you'll see in the gold market.
Yeah, I've seen the same thing as well. You did touch on uranium a little bit earlier. I wonder if you could expand on those thoughts. You got in fairly early, and I think a lot of people who are newer to the sector don't really realize a lot of money has already been made. So, what caused you to sell? Were you seeing that uranium was entering a little bit of a mania phase where it was starting to get overbought, or was it just simply that you'd made enough profits that you were satisfied? Why did you decide to sell? And do you think uranium still presents an attractive value proposition for a new investor entering the market today?
Very good. And I'll answer all of that. First of all, I got involved when uranium was on either side of $20. And, things like Cameco were single digit priced. And in fact, I didn't even realize I was never an active person in it. I was never involved in that first time when it went crazy. And it was a gentleman that's still out there that speaks that was talking about it. I said, uranium's down at that price? And then we were talking, it was just the early stage of electrification and everything. And I said, wait a minute, nuclear power is going to. And so I got involved, but I went in this way, and I still think this is the appropriate way. I went in on the belief that unlike other types of metals, there was a very uniqueness in this metal. There were very few public ways of playing people that produce it. I mean, there's literally hundreds of gold producers, silver, zinc, whatever, but there was really, you can almost count on your hands the public companies that physically produced it, sold it, etc. Yet there was still a whole bunch of, wannabes and so forth. And of course, that's where retail likes to go and so forth. So I made a decision when I got long it that I was going to focus on the companies that produce it or started to come out. Sprott was the first that were actually buying it and holding the metal and the profit from it. It ran early, the beginning of this year, over $100. So, I made and lost enough money multiple times to know if you bought something at 20 and it's at 105, you got to think about taking something out. I decided at that point in time that I was going to come out of it because the enthusiasm just became too much. I mean, the internet's great and there's some good sources on the internet for it. But every two posts, I was seeing somebody sending a rocket ship with, showing
Yeah.
the uranium and all. And anything that had the name uranium is going to go to the moon. And I just don't like being invested at that time. That was the main reason. I still think that exists. As much as there's been a good move and a retracement of the price, the fundamental story's never been better. This is what I would say to the people that still own it, but with a little asterisk to think about: be overweighted in the ones that produce it or physically own it versus the people that are still hoping to find it. But the uranium argument itself has never been better. Let's look at the things that a few years ago that changed. The biggest was you went to a senator 10 years ago in the United States and said, hey, I'm thinking of building a nuclear plant in your state. Over my dead body. Wasn't popular. Now that same senator, if he's still in, goes, could you please build a nuclear plant? We really need power in our plant. That's a dramatic change, and that's all around the world, most of the countries anyway. The second thing is the things that were supposed to compete with it, they're not banging out wins. We're shutting the windmills that are off the shore in New Jersey right now. We're not getting excited about building them. Yeah, solar's working, but we also saw these places where people built these solar farms and suddenly storms came and destroyed it. So the uranium argument in nuclear has never been better. So I don't think you need to sell wholesale because somehow. I just think you need to temper and recognize that the leaders, the people that produce it, need to be overweighted. It's very hard, first of all, to be successful in anything that's junior. Listen, most junior gold stocks aren't going to work. Most junior silvers are, but uranium, it's especially difficult. And the problem there is it could take a lot longer to get out and all. It could miss the cycle. So I would just say, yes, bullish on uranium to answer your question, but overweight in producers and people that physically own it versus people that are first trying to find it.
Yeah, I completely agree. That's my approach to the sector. I want to talk about geopolitics for a moment. The geopolitical landscape continues to shift. We've seen the Assad regime being ousted in Syria. The Russia-Ukraine conflict is heating up as Ukraine strikes Russia using American missiles and probably American satellite data as well, kind of directly involving the US in the war. Putin has vowed retribution. We're even seeing drones over New Jersey, allegedly from Iran, and then the Pentagon says they're not. But it seems to be a bit of a mystery. What are you watching the most right now when it comes to the realm of geopolitics? What has you concerned, and is any of this investable?
Well, the first thing I think is, and I can't prove this in any way, shape, or form, but I really believe Putin is counting the days to Trump to get in. I really think they both think that they could work out something, and that's the main reason why he didn't retaliate yet, putting it in a major way. I think the handwriting is on the wall too, because also one of the things that I think Trump is very strong for, and that's either getting out of NATO or NATO picking up more of a share than it currently does. And I don't think Europe as a whole. I personally think the EU, as we know it, is done. It'll get by for a few more years before some countries really want to get out, but it's going to be in no shape or form to force the United States to be more of a player in NATO and all. So I really think the Ukrainian situation, as scary as it was just a few weeks ago and all, I think one of the key reasons Putin has not retaliated as some was concerned is because the overtures have already been made. I would not be surprised they've already had conversations, Trump and him. Not that they're buddies, not that they're going to go out and have a beer together, but I think he feels more comfortable that he can get a better situation if he just waits. And it's only a month or so away now and all. That issue. The Middle East is a different story. The Middle East is a very unique situation here. I don't think people recognize how much Israel has done in this last year. And it really was led by the unfortunateness of the massacre that they had to endure to get them to this. But they really have changed potentially the makeup in the Middle East. And the last piece now is even Trump today, as you and I, before we started recording this here on the 13th, he put out a story that, he's thinking about maybe it's time we take out Iran's nuclear capabilities. And, I think Israel can't wait to do that because they have been really wounded, Iran. They're set up, their evil groups, the groups that they were using and all, they've been beaten up pretty bad here, last being the Syria situation and all. So the Middle East has some potential for real, hopefully, change and all. But I think the big political mistake, the geopolitical mistake is to, and again, I've been a huge bull on the BRICS when almost no one was talking about it, other than our friend Andy Sheckman, who always kept my bullishness on fire. I think it's real. I think we're seeing that change in the world. I think that's the main reason all the central banks have bought so much gold, Jesse, is because they see the change coming in the world with monetary systems, and the United States and the dollar is basically seeing its peak. It's only going to get less and less. And as much as Trump's flustering now might give people some hope that that's going to turn around yet again, I think the BRIC situation is inevitable. And so I think we better learn to understand that we are not the big guy with the big stick anymore, even though you might feel that way for a few months into Trump's presidency. And the BRICS will still be a formidable force, and we'll see more countries, especially now that we've gone ahead and we've taken the Russian money and we've taken the interest and we've given it to it. And we see now the threats of tariffs. Privately, you have to understand that the leaders that are trying to get BRICS moving forward are turning to these countries and going, listen to what Trump wants to do. He wants to ban you, be no involvement, throw you out. You want to be with that? You want to be with us? We're the new kids on the block. And I think he really created an extra marketing tool for the BRICS, but we won't see that until next fall to see how many move forward. And I believe it's going to be a substantial amount move forward with the BRIC movement.
Yeah, very interesting too how the Western mainstream media is portraying giving that money to Ukraine, saying, "Oh, it's just the profits from the frozen Russian assets. Not it's theft. It's just pure. They stole the money and they gave it away." So that's a very interesting development to watch as well. With all the uncertainty we've been speaking about in markets and with geopolitics, do you think it's important to have a cash position? You mentioned you're in cash and junior miners. Obviously, that combination is not for everybody, but for your average investor out there, does it pay at the moment, do you think, to have maybe more dry powder than in a normal, quote unquote, normal market situation? Or do you think the cost of not participating in the market is too great in the long term?
So I'm in my 41st year, so I've been around the block a couple of times, and probably one of the single most things I heard, not directed at me so much, but directed at my industry over the years was, hey, you guys always tell us, and gals, always tell us when to buy, you never tell us when to sell. And my argument was always simple. You should start to consider selling if you couldn't first buy. So forget where you've been and all. If you were first coming to the U.S. stock market today with 100% cash, how much would you plow into the market? That's a case by case. There's no cookie cutter answer at all. For me, and I think the more gray hair or less hair you have, the more conservative you have to be, the bigger the cash position should be. Now, in my planning group that we do for U.S. citizens, I've adopted a product that I hated for years, but it finally became useful. And now it's very useful because of my outlook. And that's what we call equity index annuities, which basically cap the gains you can make, but also cap the losses you can have. And I think this is an important statement, not so much that you have to own that, but it's not how much we're going to make, Jesse, but how much we don't lose, which is going to be the difference of whether we make money or lose money over the next few years. And I think one of the first principles that's key in my life, how I live my life, my Christian Catholic faith, we have to spend less than we make. Right now, most Americans are not doing that. 7 or 8 out of 10 families, and I suspect it's a lot about that around the world too, spend more than they make. And they're living on borrowed time. People, so how do they do that? Well, how do they live a higher lifestyle? By debt, by for large car leases, foregoing fixing homes, taking care of their own health, spending the money on today's needs and all. And I think that's going to come back to bite people. And I think there's one other issue that those people need to be concerned about. Markets have returned exceptional returns. Kudos to anybody that's had it. But I think to expect that to continue is far reaching. And therefore, even though the market may not go down a lot, it may not keep going up in the manner that people have grown accustomed to. And that's where the issue should be. So I think cash, to answer your question, needs to be a significant part, but it's all based on individual needs. But I think it's appropriate to have some.
Well, Peter, this has been a fantastic conversation. Always enjoy talking with you. Tell us about Peter Grandich and Company. Tell us about your YouTube show and anywhere else you want to direct people online.
There is a website, petergrandich.com. I am part of a planning group just for U.S. residents, but most of my work now is done on X. I learned to say that now versus saying Twitter first. But that's where I found my best communicating. I do have a YouTube channel where I get to be blessed by people like you to interview me. And I also get to interview you on occasion. And that's where it's at. I just like to say that as we approach Christmas, as you know, this will air a few days before Christmas and all, we get in a spirit now that somehow doesn't last the other 11 months. And I guess the greatest gift we can give to ourselves, our family we love, and all that we have is try to make Christmas as much as 365 days a year as possible. And maybe if we all started to try to do that, the world could be a little bit of a better place.
That's a fantastic thought. Thank you once again, Peter, for coming on the show and sharing your knowledge with the audience. Looking forward to doing it again.
God bless you, Jesse.
And thank you for joining us today. This episode is brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.